Well, hello, folks. I'm LA Little, and this is your daily NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective. Each time we ask ourselves just one question: what happened today, and what does it tell us about the coming ones? Do the show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube, available there. You can subscribe to it on the channel LA Little. Also do a show on the weekends, on Sunday night, broadcast same time. More of a broader perspective, asking the same question, but on a longer term time frame, looking at the intermediate and long term time frame. So a lot of good material there, and of course videos and so forth here on the side if you choose to stop in and take a look. Have services, a lot of good stuff at TA today, a lot of good things going on. Let's talk about these markets and whether it was good or bad. Today was actually a pretty mixed market. Dow just could not get going. Finished the day down about 100 points or so. Was at 126 3/4%. S&P's dropped a third of a percent. Russell was up. Again, they don't give me the right numbers. I think it was up about 0.3 or so, and we were almost flat on the NDX and composite, but higher. Gold drops slightly again today, and we had silver down as well. Copper, basic materials basically getting hit, and the basic materials sector got hit too. Oil, new lows today. I actually will look at that chart because I don't know if it closed or not. Dollar flipped around, got a little bit of a gain today, but overall it was kind of a sit and wait. Where do we go next? Right? It's almost like a plane sitting at the end of the runway, and it's about ready to take off. And the question is, are we going to be skying up like what we see here, or is it going to be something more like this? With the Fed tomorrow, right? Anything can happen is kind of the attitude. This market seems to think what is going to happen is a takeoff, not a crash landing, and it's been building up into that. You had two big bars up, two bars trying to take it away. Matter of fact, if we look at the Dow, which got hit the hardest, that one is that, right? Pretty much a takeaway the day before, and it finished up in the middle. Tries to take it away again today, finishes up in the middle. The Dow is really struggling to get higher. S&P's not as bad, but not as not that great. Both of these coming back up into retest, regenerate zones that were previously broken, and as they come back into them, they're actually coming into a bearish retest, regenerate zone off that low. So, the key area is here as they come back into it. And let me see. I don't think we have 6 bars. Let me see. That low was 2085, 2083. So 1, 2, 3, 4, 5. Well, goodness, that's surprising. So that takes on a new aspect that I didn't even realize until I was talking about it just now, and that is that as the S&P comes back up, the S&P is coming back up after 6 bars. And when you break and it takes 6 bars to get back, the probabilities are higher that you're actually going to regenerate lower. And so in this case, the S&P is actually set up to fail and try to come back down. The probabilities favor that move. Let me look at the Dow now that I've stumbled across this on the S&P. I'd failed to notice this. Now the Dow's not as bad. Dow's actually back into that low already and already retesting. So that's a new wrinkle that I wasn't aware of until we started talking now. Where we can see that wrinkle not applying, of course, is elsewhere in the stronger indexes. So if we go over to the NASDAQ, right, you're over it now. And what I'm saying you're over that retest, regenerate zone. In this case, it's 49.29.53. Yesterday we got up to it. Today we get over it. So NASDAQ pushes over the regenerate zone, closes this, and now is back into the breakdown bar, the highest of the two. Remember, there were 2 breakdown bars. We had one last week, well, let me get this drawn on here right. Actually, let's just get the date. March 6th, and the second one was on March 10th. And so if we go back, we're talking about this bar and this bar. Well, they've already easily gotten over this one, right? And now they're back into this bar and testing into it. So NASDAQ pushes back above the retest regenerate zone, bearish, and has closed the gap and is back into that first breakdown bar. So that actually is a pretty good looking picture. This is the first bar. You like to see it hang over at one more bar. That would be tomorrow. Of course, tomorrow everything lines up tomorrow, given that the Fed is going to announce and Yellen is going to do a speech. If we move over to the NDX, now the NDX is doing the same sort of thing, coming back to test into that retest regen zone, bearish 43.8844, and let's see here, 43.88. Let me get the number one more time, 43.88. Yeah, so this one is 6 bars. So this it's interesting. Sometimes you can look at these charts and you don't even see it. I need my charts to actually show me this from now on. So this is coming back into this bearish retest regenerate zone, and you've got 6 bars before you come back. So again, the probabilities favor this to try and regenerate lower. So as you come back into here, you try to regenerate lower. That's interesting. That's 2 of them now. We've got the NDX and the SPX. IXIC, which is the NASDAQ composite, is actually over that same low. And if we move over to the Russell went up today and actually tested the high and failed. But it didn't do it, it didn't do it terribly, and it hung right at it. But that high today was 1243.33, the one it was getting after, and it went to 1243.33. It went to the exact same number, tested on 322 versus 340. So you actually go up, you test, you have less volume. That's a test failure. So we've got bearish retest regens after 6 bars on the SPX and the NDX, and we have a test failure on the Russell. On the flip side, the Dow's testing into the bearish retest regen zone already, and the NASDAQ has actually gotten over the composite. If that's not a mixed picture, and if you don't know which of those 2 scenarios, is it going to be a crash landing or is it going to be a smooth takeoff, well, the market's not telling us which one, and it's going to be up to the Fed to tell us that. Let's come back and look at some other material after these messages.
At TA Today, we have many services that teach trading to our clients. You can use LA's tools to trade and/or learn how to trade alongside LA using his neoclassical methodology. To earn these free services with no subscription or charge, go to our homepage, click on either the Tools and Earn Free Services or Trade with LA and Earn Free Services. On this page, you can refer a friend. Fill out information about yourself and the friend you are referring, and you will earn up to 3 months of free service with no charge as long as your friend continues to be a subscriber. So remember, refer 1 friend and earn up to 3 months of free service with us. The more people you refer that sign up, the more months you earn. If you have any questions, let us know. Thanks from the TA Today team, bringing you tools and ideas to help you trade.
So as we come back here, I'm looking still a little bit, not perplexed, but intrigued by what we just discovered together. And I came back over and started looking at the weekly time frame on the Russell. And so I'm up on the weekly, And I'm looking at the swing point lows down here, right? And you know, we work our way up and then we break these swing point highs up here. And we immediately come back underneath them, get back over them, and test back into them one more time right here. And now we're trying to push up to the top again. It's just a mixed picture. I mean, even when I look on the weekly, it's a mixed picture. Now, the good part about it is that, you know, this thing could take off again. And, you know, the setup is here. You've got the ABCD structure that can take you higher. All you need is the Fed to, you know, talk about how great things are and that we're not going to raise rates. And then this market's going to, you know, try to sky high on it. If I look at the, and I'm going to go back to the NDX now. If I look at the NDX on that same time frame, and let me pull the weekly up here. Here you actually had the retest regen both on the daily and the weekly, and this was a bullish one. It held, and then now it's trying to regenerate higher. If I look at it on the composite, it's the same story. The composite tried to come back, and matter of fact, the composite didn't even quite get back to it. It got close, but not back to it. So that's definitely the strongest of all the indexes, 48.42. That high was 48.14. And then finally, on a weekly basis, if we go to the S&P 500 and we look at it, the case here is a little different because you never got 6 bars on the way up. It actually overran it before it could print. And so the S&P, you know, all you had here was a range breakout. It came back into the range and then held above it now. And what I'm talking about is this range that we've talked about quite a bit already, and that's right in here. And you can see we're right over it and holding over it. So, you know, all is not lost. It's not as if this market's ready to crash and burn. At the same time, unfortunately, the signals are so mixed that we have no clear indication of what the Fed is going to bring about to these markets. Clearly, the markets are trying to front run the Fed again. They're trying to push back up right in front of it. And we've seen this over and over again. And I guess we'll see if it actually holds. You know, if I wanted to do just candlestick analysis, you know, these long tails typically are good. You know, so you're getting the market pushing up, and as they try to pull it back, they come back in and buy it by the end of the day. So, you know, overall, and I guess I'd add one last thing, and that is overall the trend is still up in most cases. In the short term, it's sideways, but elsewhere, it's long term and intermediate term are up. So you have to lean with the trend if you're going to lean anyway. You're not going to lean against it coming into an announcement like this. Yeah, I looked over at the sectors today, and there really wasn't much going on over there. I think what's more instructive is probably to look at the bonds and to look at the commodities and the dollar. On the bond market, you've actually got, and the bond market was very interesting because the bond market had an ABCD structure on the way down. It got shortcut here, didn't finish, right? Came back up tested, was unable to break above it, and then it kind of resumed that downtrend with this break, so this kind of resumed going, right? But it never quite got to the target still. Got a big blow off bottom and then reversed, and now you have an ABCD structure going back the other way again to take it back where? Right back to these swing point highs again and right back into this big bar, maybe right to the top of that bar. And so bonds, if you think the market's confused, bonds are confused too. They can't tell whether they want to break down or break up. You know, when the Fed talks about raising the rates, well, that puts pressure on bonds. But then as soon as it does it, when you got negative interest rates around the world, especially in Europe, I suspect these bonds look pretty appetizing to them in terms of a yield. And so, you know, the demand still comes in. And don't forget, even though the Fed isn't doing QE right now, the Fed is still reinvesting all those bonds. So it's not pulling any money out of the system. It's keeping it flush in there. You know, it's keeping the market afloat the bond market in terms of demand. So we don't have we don't have a breakdown here yet, and I suspect we're not going to get a breakdown. It did look like we were going to finish off that ABCD structure to the downside and bring it back into this low, but it just didn't get there. So bonds put on hold. If we go to the dollar, the dollar has been on a tear and the dollar still isn't backing off. Tomorrow we'll see what Yellen wants to say. You got the Fed the Fed meeting announcement coming out 2 o'clock Eastern time, followed by the Fed chairman, Yellen, with a press conference. The assumption is they will take away the patient language, and then the market is assuming, and this is going to be the big assumption, whether it's true or not. The market has already discounted to some degree that Yellen is going to come out and talk dovish. So as soon as they take away the language, she's going to come back out and say, "Oh, well, maybe we're not going to, raise anytime soon, but we'll evaluate it from meeting to meeting." I don't know how she's going to couch that language, but I'm sure she doesn't want to freak the market out. Nobody wants to, and so they all keep talking it up. And one of these days, they're going to have to face reality and say, "Hey, we're going to raise rates, or we're in deep doo-doo, and we're going to have to lower them again, right? We're going to have to put more QE out there." And I suspect in the end, it's going to be the latter. Maybe they'll get one token rate raise out there, on this at some point. But I wouldn't be surprised to see their hand forced and they go back the other way. And what's really going to be the day of reckoning one of these days is when the market finally decides that these Fed speakers and not Fed, but central bankers around the world are just as clueless as any economist out there. I mean, that's going to be the day of reckoning, right? When the markets no longer take them at their word as if they somehow have this a priori knowledge of where the world and the markets are going. I want to quickly scan a couple of these other bonds. So municipals. So the high corporate bonds just sitting there. Municipals still bouncing a little bit. Junk bonds. Wow, that's interesting. So junk bonds are coming back down again. And they're into that bar now. That's a interesting development. We'll have to watch this. We'll have to continue to make sure we monitor it, because when the junk debt trades down, that's typically on a longer term time frame, that's typically not good for the equity markets. I don't think the timing is great on this in terms of the correlation, but it's something to always kind of monitor. Gold could not lift again today, and it was just slightly down. So gold actually pushed up and then reversed and closed down. Let's look at that weekly. See, that low was 110.16. Yeah, so it closed just over the low. It's under that swing point low. Yeah, this gold is going to test the lows. That low is 109.67, and we're within 10 points. So I think we'll hit it tomorrow. Definitely going to try. Now gold should go up if the Fed's going to be easy, right? And it should get hurt if the Fed's going to be rough. So that's kind of the measure there that I would be looking at if I'm watching these. I want to quickly look at the FXE. Not bad. FXY. So Japan continued its easing policy, and Japan is getting ready to break down again. So that low is 79.98, trading at 80.07. It's definitely going to test it, and we'll see if it breaks it out or if it continues to range trade. At some point, I would expect this is going to continue its downward decline. Okay, elsewhere, Europe got hit today, and China breaks out. China, and you can see it actually with a symbol called ASHR, which is currency neutral. And because I don't have my Shanghai market available to me anymore, I kind of rely on one of the members who went in and looked at it and gave me the heads up that it really looks just like this chart, and it did get over the highs today. So it gets over the highs, at least Asher does, without much volume. And 38.25 closes at 38.82, up 5%. Is that what that is? Yeah, almost 6% today. What a move. So they're piling in there. So, and Japan I saw also broke out today. So, and I believe if we look at DXJ, we can, DXJ doesn't quite reflect it. But Japan, the topics actually broke out as well. And I saw Korea made a huge move today. So we're still seeing the QE effects, right, in all these equity markets, particularly in Europe. And in China's case, and I'm not sure what happened in Korea, maybe there was a surprise rate cut or something. But in China's case, they did the repos and essentially started easing again. All right, let's take a couple of viewer questions and then we'll do our final thoughts. Okay, as we come back here, one of the members, or actually a viewer, had written in and asked, let me see here, this question. Hello, the headlines today read that oil is at its lowest level since March '09. Can you review the charts for that period? Don't have a position, but if it's breached, maybe it's a great short candidate. Thanks. If we look back, and first let's just start with oil here. The price point that we're at now, right, is underneath the swing point low. And it broke under it today, tried to break it yesterday, broke it today. Doesn't have the volume, I don't believe. Let me look at it again. 28.5. It's actually 30, so it actually has the volume on this ETF. And if we go to the weekly, it's breaking it as well there. Now today is Tuesday. The number here is 167, and we've done 68. So that's really, you're doing about 35 clip. That'd be about 170, I guess. So it's going to be pretty close in terms of, you know, the numbers. If it projects, you know, if this volume pace continues, I should say. If you break on multiple swing points, then of course you get a potential for a 2 to 3 bars on the longest time frame, which in this case, in the direction of the break. So in other words, if you break this swing point in the direction of the break here, you should expect 2 to 3 bars, right, extension. And it doesn't always go that way. It could be sideways, you know, just kind of hanging around versus plunging, but it's usually 2 to 3 bars. That's the setup, right, that I believe this viewer is looking at and saying, hey, you know, what's the setup and how does that project? If we look at the time period that he's interested in, oil has actually already been under that low for some time. And what we're talking about in terms of that, let me clean this up here. What we're talking about in terms of that is that, and I've got this pulled back as far as possible, right? This was the time period back in that plunge that happened in the crisis, or that led up to the crisis actually. Oil began to plunge before the markets did. Matter of fact, you know, if you go back and look at it, oil topped out in July. And if you remember, the market plunged in September, October. Oil had already come off that top. But then it really plunged, right? Well, it's been kind of gyrating ever since. You got these lows broken here. That led to a faster move. That broke the lows of '09. And they've been broken now for, and I'm looking on a monthly, they've been broken for about 4 months now. This is the 4th month. So it's not like it's new. You know, and it depends on what you're looking at. You know, this particular fund may not be the same thing as Brent. It may not be the same thing as West Texas Intermediate Crude. I'd have to go look at it and see exactly what it is. You know, but oil basically is at new lows. So now the question is, you know, if it's at new lows, you know, how much farther can this thing go? And, you know, to look at that and to think about that, I actually did a calculation this weekend for the members, and it has the potential to drop 44% from the price point it was at the time that I did the show. For members, it was at it was at 1680 at the time. So let me pull back up this chart. At 1680 it had 40% to go, and that was the close on Friday. And since then we've had 44% to go. Since then we've already dropped 2, 4, so it has about 40% more to go. And if you notice, if you did the arithmetic here, and I'm really taking that off the weekly, not the daily, so let me pull the weekly chart up. If you take this ABCD structure, and let's just go back to this, we're talking 3562. So 3562 is this high, and then the low is 1630, which is here, and then the bounce, right, 2029, and now you break. Where can it go to? Well, arithmetically, if you do the subtraction here, you can see this is 19, but yet we only go down from 1680 to 9. Why is that? Well, because it's a percentage move. And this is where that becomes important, because it's ridiculous to think it's going to go 19 more, because it can't. It would be bankrupt. It would be zero. It's not going to zero, folks. It's a commodity. And that's true many times of equities too. I mean, the worst I can do is go to zero. So arithmetically it doesn't work. That's why you should use percentages, and is what I do. And so anyway, where could it drop to? It could drop 40% more. How do you know that that's a good probability? You wait to see if in fact this thing's going to stay under this low on the weekly. Right now you've got the break on the daily. What you want to see it do is break on the weekly and stay under it. If it does, then there's the possibility that that trade could be put on, and you wouldn't have to risk a whole lot, but you have a huge potential for a windfall move to the downside. And boy, if it collapsed 40%, I'm not sure what this market would do. So we'll see how that ends up. Let's go to the final thoughts. So as we come back here for the final thoughts, I just want to leave you with one simple thought, and that is that sometimes you just don't know what's next, right? I mean, if we take all the odds that are apparent to us, right, we have a lot of mixed signals, especially on this time frame. If we move out to the intermediate term time frame, and when I say mixed signals, S&P, we covered it at the top of the show here. But when I move out to the weekly, right, it's fairly clear that the trend is still higher. I mean, this trend really hasn't changed, and there's no reason to believe that it might not just go and do it again, right? It's done it enough. Now, I would point out that this was one large consolidation with a lot of gyrations. That type of movement, week in, week out, really takes something out of the market. So when I look at the market, from that kind of a perspective, hey, this could be a topping process. And if I were doing classical stuff like I used to, right, I'm sure there's going to be people out here pointing out some sort of a head and shoulders formation, if we just kind of hang out here for a while. Right? Especially if we come down on the Fed, then rise back up to here. Right? That's going to look very much like a head and shoulders, with this being your neckline, right? And that's a fairly large drop. That takes you all the way back to here. So I don't want to get too overly, pessimistic. I think you can read into the charts whatever you want to read into the charts. What we do know is that we've got mixed signals on the dailies. We've got longer term bullishness both here and on the monthly, right? It's no different here. Matter of fact, it even looks stronger here. So when you look at it and you say, okay, where's this market going? Well, you just got to assume it's going to keep going up. At some point, it will give us clues that says it's over. But until it does, if you're going to lean, you lean long. Doesn't mean you have to be strong and long. It doesn't mean you have to have 100% plus of your money in there. It really is what your risk profile is how much you want to have sitting on the line coming into a meeting like this that we really don't know what it's going to do on a short-term basis. But if you're going to stay with the trend, which is what you should try to do most of the time, the trend is up, folks. It's not down, and until that changes, you have to keep thinking that way. Until next time, I'm LA. That's the daily wrap for tonight. Have yourself a great night. Fed will be up tomorrow. We'll see what they want to do. Have a great one. Take care. Good night.